Hey everybody, my name's Jason Kaufman with the Kaufman Home Group at Heron Real Estate, and this is
Pearsall with Premier Home and Finance.
Cheap Drinks in Real Estate, where each week we talk about different real estate related topics and highlight a different cheap drink that we found over the week to try and save you guys a little bit of money. Because let's be honest, it's expensive to buy a house, so if you can save a little bit of money on the drinks over the weekends, it's a win-win for you.
That's a plus.
Yeah, absolutely. Today, we're going to be talking about date the rate and marry the house. It's a term that I've heard quite a bit lately, like all over the different forums and everything for real estate agents. What does that actually mean? And is it true? So we'll get to that. But first, I'm going to bring out the drink for the week. And Adam, I know you're more of a Miller Lite type of guy, but that just would not cut it this week. So I found possibly the cheapest drink in this category I have ever seen before.
And I don't know what drink he has, so I'm going to be surprised by this.
Do you have any guesses on what it could be?
I mean, we could classify Miller Lite as a cheap drink, probably.
But classification, so that would be a beer.
Gosh, I don't know if I had to guess. A seltzer.
A seltzer. Okay. Maybe a good guess. But let's go ahead and bring it up.
Let's find out. It's hot.
It is hot. We are blaring in the sun. All right. This week's drink is Deo Spiked Watermelon Water. This is a gluten-free spiked fruit water with gluten-free vodka. Now, you typically see vodka soda, vodka water. You typically see it for, I don't know, 15 to 20 bucks for an 8-pack. Okay. Guess how much this was?
$9.99.
For this 4-pack, it was $3.
$3.
$3.
Not bad.
No.
It's not bad.
So I got one for you.
All right.
I got one for me.
What percentage do we have here?
We have 5.5% alcohol.
5.5%?
It is 100 calories and 3 grams of sugar.
Oh.
So for those keto people, it's nearly keto. It's nearly keto.
And for those that may be in one of our industries that watch this, you know how important a good alcoholic beverage is to get through the day.
Cheers.
Cheers. All right, let's see what we got.
Okay. Now, we're not going to discuss what we think of these drinks right now. We'll talk about that at the end. But for now, date the rate and marry the house. What exactly does it mean for the mortgage side, Adam?
So everybody's hearing that a lot. You know, like you said, it's a phrase that's thrown around a ton by lenders, real estate agents, everybody. And it's a term that I think is used to consumers. I think sometimes it can sound, that's just something you're saying to try and get me to buy a house. Right. So, but that's really not at the core of what that phrase means, because what it is that everybody knows that in the last 2 years, interest rates have climbed like crazy. Affordability is down. There's no doubt. If you were looking for a house in 2021 and rates were 3%, you had a payment that was going to probably be 70% cheaper than what it would be with where interest rates are today. So for buyers with date the rate, what we mean by that is, look, find a house that you really like. If you're in the market, find a house that you want to marry, because you just have to date the rate, meaning obviously she might not be the prettiest rate that you're going to get, but you're going to be able to break up with her eventually and get a better looking one.
Right.
And that's the gist of, marry the house, date the rate.
Now, on the real estate side, marry the house is basically because right now, obviously we saw back during COVID time, we saw the housing prices climb like crazy.
Right.
They've kind of leveled off right now because of the interest rates.
Right.
So the marry the house is essentially saying where we're at right now with the high interest rates, prices are holding steady.
Right.
They're not increasing a ton. They're not decreasing. They're kind of flatlined. So now is actually a good time to purchase a house, because once rates actually start going down, you're going to start seeing those prices increase much more drastically again, because everybody's kind of at a buying freeze right now, waiting for the rates to come down.
Right.
And once the actual buyers start coming out and they start buying more houses, you're going to see prices go up because demand is going up and inventory is coming down.
Correct. And you will see that. And it's it's funny here in Northeast Florida where we are, in Florida in general, everybody knows we're kind of our own market. You hear more, where, if you're listening to national media, if you're just reading things that are online, you're going to see it's like, oh, maybe home prices have dropped, right? You're seeing that in other states. Florida, we're our own market. We just don't see that as much, right? So we're kind of the last ones to react when it comes to prices going down, and we're one of the first ones to react when it comes to prices going up, right? So with it being a good time to buy, like you said, home prices are holding pretty steady. That's a good thing. You're not really getting in bidding wars right now if you're having to buy a house.
Right.
So, to marry that house a little bit easier, and then to, get an interest rate right now. Look, rates are up. There's no denying that. I'm not here to tell you, hey, rates are good. You should buy a house. If you need to buy a house, you want to buy a house, it's not as daunting as you may see. There are options out there to make it more affordable, to help you with the payment shock that you may experience today, that you wouldn't have experienced 18 months ago or so. And part of that is from dating the rate and how we can get you into a rate that you just have to date, so that when rates do come down, whether it's 5 months from now, 6 months from now, or 12 months from now, you'll see more affordability in that time frame.
Right.
Yeah.
So based on the current state of the mortgage industry, you would say that date the rate is actually a good phrase to be using as it stands right now.
Yeah, 100%. I mean, even, with all the phone calls that we get every time we're talking to somebody, everybody knows that rates are up. And the other thing is, if you were pre-approved 12 months ago and you're calling now and saying, hey, I'm ready to jump back into the pool to buy something, and rates are up a little bit, you don't realize exactly what that payment shock looks like, right? Where the payment's going to be today, where it would have been back then. So that's when we have that conversation of, look, we still want to get you into something that you can actually afford, right? On a good budget for you and what matters to you. We're always going to do that. But with the realization of, look, there will be a brighter day, whether that's 6 months from now, 12 months from now, or whatever that looks like. We're going to be able to get that payment down for you. We still want you in something affordable today, but it's going to be even more affordable down the line. And the other side of that, Jason, is that houses aren't going to be more affordable on the other side of that.
Exactly.
When rates come down, more people are going to come into that qualifying pool, where more buyers are going to be willing to jump in, where that payment shock's not quite as high, right? Because rates are down. That's going to create more competition in the marketplace. All of a sudden, what do we run into again? Bidding wars, or prices going up a little bit, just because there's more buyers in the pool, where right now you don't have maybe as many buyers in the pool, and it's allowing you to get a better opportunity and take advantage of some of the things that we're going to talk about in a minute, where we can get better rates now than what may be available.
Yep. And then as far as marry the house, it's completely an accurate statement. While I don't like the whole term marry the house, date the rate, or whatever like that, you hear it a lot, but it is true. Because just for instance, I printed off some stats on the real estate market, and some of them actually kind of surprised me from last year to this year, because a lot of people were thinking, oh, well, with the interest rates up, you're going to see prices decrease and everything like that. And while last year we did see some of that shock, where prices started dipping down just a slight bit over what they were in like 2021.
Right.
But now where we're standing at right now in 2024, April of 2024, the stats that I have from March, home prices actually went up from last year by 5.4%. And that is considering Northeast Florida, which are the main 5 counties, which is Duval, St. Johns County, Nassau, Flagler, and Clay County.
Yep.
So in those areas, you're seeing houses and prices actually go up. Closed sales, the surprising aspect is that has actually come down. So we've actually seen closed sales come down by 8%. So that's where you're not seeing the buyers, but you're also not seeing the sellers as much as you did before.
Or the price drop.
So that means that the inventory is lower. So the demand is still there. So while closed sales did come down, home prices did go up. We also saw days on market come down from last year. Last year, at one point, I think they were at like 55 days on market. We're sitting at 32 days. And list price received for the buyers that think, oh, I'm going to go out and I want to buy a house and I'm going to offer a cheap price because it's a buyer's market. List price received is 97.7%. So that means that what people are listing their house at, they're getting almost 98% of that listing price.
Of the listing price.
In that. And the main driver for all of this is the months of supply of inventory. Now, the way that months of supply of inventory means, if no other houses came on the market as of today, how long would the houses actually last that are actually out there? Right now, we're at 3 months. A good market is about 6+ months. That's kind of an even market. So it is still truly a seller's market right now.
Shortage of supply.
Exactly.
Yeah. What was the dip? Let me ask you, what was when you said we saw the dip in prices, right? For that short period of time. Do you know what it was? I might be putting you on the spot.
Oh, no.
How much did it dip?
I don't have the exact number as far as how much it dipped, but I would say, it probably dipped up to 7% towards the end of 2022, early 2023. Yeah. So we saw quite a bit of a dip during that time, but now we're right back up to, where we were before.
Well, now it came from the initial shock, right, of interest rates literally tripling, So, where everybody that had a house had refinanced during COVID. In that low era, they were in 2.75%, 3%. A lot of people are sitting in that. So, when they're unless you had to sell, you weren't, because no one wanted to trade 3% for 7%. And so naturally, the people that wanted to sell, the buyer pool was tiny because the shock was still there in the market, and that caused rates to dip for a minute until it settled. And then the buyers came back out because people have to buy, people relocate, right? Have to move here for jobs, whatever the case may be.
Right.
And so all of that goes into it. So I think we hear a lot about, I'm going to wait until home prices go down.
Yeah.
And we've been hearing that for, I don't know how many years now?
2020.
Yeah, maybe before that.
Yeah, it was because it was right around when COVID hit,
right?
And prices went skyrocketed, and people were saying at that time, "I'm going to wait for prices to come down." They kept going up.
Right.
A little bit later, I'm going to wait for house prices to come down.
Right.
Kept going up.
And when we're still in a spot right now where the buyer pool is smaller, with affordability being low, right?
Yep.
And price and mortgage payments being high, we're still sitting on 3 months of inventory.
Exactly.
We're still halfway. That's it to a normal market.
And that kind of leads into the reasoning for that, is because you're seeing less sellers come out because they got such low interest rates during that time when interest rates were fantastic.
Right.
So you don't see a lot of listings coming up, which is also what it affects the inventory. Because people don't want to go and sell their house when they have a 2.875% interest rate.
Yep.
But in all honesty, and I'm sure you can vouch for this, historically, 2-3% interest rates are not the norm.
Not at all.
No. And the norm,
that's why it was record lows.
Yeah. So the norm is actually kind of almost where we're at right now.
We're close. We're a little high. I think in the last, even since 2000, right, the average rate is about 5.5%. Was the average rate. So we're close. We're a little above that right now, right? So interest rates right now today, I think are hovering on the average is like 6.875, just sub 7, right in that area, depending on the factors, right? Your credit score, your down payment, loan amount, all of those things go into that. So there's a range there with interest rates. But yeah, so even if we get back to the average, you're going to see a pretty good drop in rates. That's going to happen, and it's going to get more affordable.
I know this is a loaded question, but where do you see rates at like currently? The typical average rate that people are actually getting in like a 30-year conventional fixed.
Yeah. So on a 30-year conventional fix, you have good credit. You're putting down a decent down payment. Let's say 10% down. You're falling right into that close to 7 in that ballpark. So like I said, 6.875, 7.1, kind of in that range. That's with no points, right? That's just the standard. Hey, I'm getting a loan. I'm not buying down the interest rate. I don't have any seller concessions to put towards buying down an interest rate, anything like that. So you're right around that 7 mark, give or take, depending on, obviously it's different, with loan size. If you're financing $500,000 or $200,000 and all that. So,
and just for instance, today is April 18th. 2024. So we're talking interest rates today.
Yeah.
They obviously change from day to day.
They're about 3 times a day. Yeah.
So now also going into kind of a different aspect is, do you see any indicators as far as what could happen in the near or long-term future with interest rates?
Sure. So, look, I follow that stuff, right? I've been doing this for 15 years. So, I've seen them go way down. I've seen them go up, and everything in between. And a lot of the indicators that are out there, right? A lot of people heard at the end of last year, November, that in that fourth quarter where the Fed came out and said, hey, we're going to cut rates next year 3, 4, 5 times.
Right.
And we heard that. And that got everybody excited, especially in our industry, right? Yep. Everybody was excited about that. It was like, we need that.
Yep.
And then obviously in the first quarter, it didn't happen. And then in the second quarter, when we just got the report, obviously, if you don't know, the inflation numbers came out and they were worse, right? It was 3.8% or whatever it was. And the Fed came out again. We're not going to lower rates. So now we've hit that again. So the Fed will meet again in June. And then, we'll see what happens with that. Look, if I had a crystal ball, I'd be on an island sipping cocktails, not drinking cheap drinks. And, so look, the predictor is they're going to come down. I would like to think that in an election year, with Joe Biden needing some momentum there, not that he can really impact that a whole lot, but let's be real. They can definitely impact reports. Right. I mean, they can. And
we're not going to get into politics.
No. I just mean that, that would be somewhere where he could help himself.
Right.
And I don't know if he would do that. And we don't want it to be artificial. We want it to be real. So I would say, with summertime coming up, we'll have to see where the inflation numbers come in again, how that'll affect it. And hopefully they can lower them. It's coming, whether it's this time or 6 months from now, it's going to happen. I mean, we won't sit in this inflation forever. That's a deep conversation. Hey, send me a message if you want to talk about that, whatever. I can give you that information.
Or if somebody does have really good insight, drop a comment.
So. Sure. Yeah, absolutely. So like I said, I don't have a crystal ball. Right. I wish I did.
Yep.
But
we all do.
Yeah.
But yeah. And obviously the real estate market here in Northeast Florida kind of follows suit with the interest rates right now. Right. So, I mean, in looking at near term, long term, obviously real estate goes in seasonal aspects. So right now we're kind of in the thick of it where you're seeing a lot of activity in the housing market, people coming down. So Northeast Florida benefits a lot from people that want to move here. So you get a lot of those transplants from other locations. Right. So we're always going to have that demand. But the big times are typically the end of school through the summer, and then it slows down until the holidays, and it picks back up a little bit because people come into town and they're like, oh, I would love to live here, but let's go look at some houses. Right. And then it slows down after the holidays. So, I mean, we're not seeing anything on the real estate side that's going to see drops in prices. So if you're anticipating that, if you're hoping for that, regardless of what people say, we're just not seeing it here in Northeast Florida. Other parts of the country, very, very well could. Sure. But here in Northeast Florida. Now, for the buyers that are looking to purchase, you have some tools that they could actually utilize to help them out in the short term, as far as with their interest rates and stuff like that. Different things that both lead into the real estate side and the mortgage side that combined offer some potential savings for them. Right.
Yeah. So one of the things that we talk about are the buy downs. And if you've been shopping, right, you've been pre-approved for, I mean, you could have gotten I have people that have been pre-approved for 2 years that have been looking for a house, but one of the things that's really come out in the last year or two that a lot of people have heard about is the buy downs, right? So 2-1 buy down. That's the most common one that everybody hears. Hey, we can temporarily buy down your interest rate. Yep. If you're not familiar with that, there's more options than that. There's a 3-2-1 buy down. There's a 2-1 buy down, a 1-1 buy down. And what that means is that you can actually buy down the interest rate from the note rate today. So and you can use seller concessions to do it, which means it doesn't have to come out of your pocket as a buyer. And that makes it really attractive. Yep. Because one of the things that we talk about right now, specifically with, rates coming down on the horizon, we know that's coming, whether again, it's 6 months, 12 months from now, whatever it is. A lot of buyers do ask the question like, hey, should I buy down this interest rate? And one of the misconceptions in buying down the interest rate is that they think, hey, okay, the rate's 7% today. Let's use round numbers to make it easy. If I buy 1 point, I know that's equal to 1% of my loan amount. So if I have a $500,000 loan, it's going to cost me $5,000 to buy down that interest rate 1 point. Well, what they think that means is that that's taking the interest rate from 7% to 6%. Yeah. When in reality, what you're doing is you're buying 100 basis points to buy down that interest rate. So that 1 point might only buy down that interest rate from 7% to 6.6%, 6.5%. And it's not exactly what you think it is. It can be a good savings, but what it's going to do is what we want to do as a lender, in other words, is we want to make sure that you're going to make up the cost of your expense. So if you're going to spend $5,000 to buy down that rate, let's say it's going to go from 7% to 6.5% on a $500,000 loan. We're going to drop your mortgage payment by $250. Mm-hmm. Okay. And that's a rough estimate. So don't hold me to that number, but with $250, well, then you have to do the math. I've spent $5,000 to buy down my rate to save $250 a month. You just have to divide that. You have to do the math. What's the break even point? Is that 2 years, 3 years? What's it take? Because if you're going to end up refinancing in the next 12 months, that's not a wise investment because you're not going to make up the $5,000 that you've spent. So with that being said, how can we get you a better interest rate without you spending your own money? Well, one of the benefits, Jason, I think you'll talk about with the market today is that seller concessions are a thing. They're back, right? Yeah. You're not paying over appraised value. Nope. You're not doing that. So if you go in and we get 3% in seller concessions, in that scenario, you can do a 3-2-1 buy down, a 2-1 buy down. And what that's going to do for you is the note rate 7% on the 2-1 buy down. For the first year, your rate is 2% lower than the note rate. So that means for the first year, you're going to be paying 5% instead of 7%.
So it's a true 2%, not like buying a point.
Correct.
And dropping it by a smaller percentage.
Correct.
It's a true 2%.
It's a percent to the interest rate.
Yep.
Correct. You're not buying basis points. And all of this will come out of your concessions. If you have a 3% seller concession, it'll cover the entire buy down for you.
Right.
And it's not at your expense. So it makes it really attractive. So now your payment isn't based off 7%. Your payment's based off the 5%. It's a heck of a lot more affordable.
Yeah.
And then, so for instance, on the 2-1, like we were talking about, for the first year, it's 2 points lower. The second year, it's 1 point lower. So you're going to be paying 6% in the second year. And then if you're still in it in the third year, for some reason, you would be at the note rate of 7%.
So essentially it's giving buyers the opportunity to have a shorter term, lower interest rate until they can actually refinance into something better.
Exactly.
Oh, you mean date the rate?
Correct. That's it. We date the rate, and in this way, the seller's paying for you to get a prettier date for the first couple of years of the mortgage. So like I said, there's the 3-2-1, which is it's 3% lower in the first year, 2% in the second, 1% in the third. The 2-1 is 2% lower in the first year, 1% lower in the second year.
So each year your payment will go up because your interest rate's going up, but the hope is that within a year or 2 years, you're going to be able to refinance that and get it down to a similar interest rate that you were in the beginning.
Right. And again, not having a crystal ball, I couldn't imagine a scenario where somebody buying a house today would not refinance in the next 24 months.
Right. I mean, most people do. So
right. Yeah. For one reason or another.
Yep.
Right. Yep.
Well, I mean, do you have anything else that you wanted to discuss or?
Cheap drinks, man.
Cheap drinks. All right. So back to the drinks. We've got so let's rewind that a little bit. So if you want more information with regards to Northeast Florida real estate, if you're looking to buy or sell, my contact information is below. If you're looking for mortgages or just want some information as far as options that are out there, ways to save money, Adam is your guy with Premier Home and Finance. His contact information will be below. Drop a like for us if we supplied you with some information.
Yeah.
But for right now, back to the drinks. So I'm going to open the conversation to, is it a good buy? Is it a don't buy? Is it you would drink it again?
What did you say? It was $4?
It was $3 for four.
It was $3 for 4 of them.
Now that was clearance at ABC Fine Wines and Spirits. Okay. If you're not familiar with ABC, they're fantastic. They have just about everything that you could possibly imagine in there for drinks.
There's one within 5 minutes of you if you live in Northeast Florida, or if you're going to move here.
Yeah.
It's not bad. I'm going to be honest with you. So
for a clearance price of $3 for 4 of them, it is a strong buy. If you walk into an ABC Fine Wines and you actually see these, if you like seltzers, if you like vodka sodas, anything like that, this is actually, I really, really enjoy it.
Great for a day by the pool.
Absolutely.
On a hot day.
And it was a bad idea wearing black today because it is quite warm today. Well, we got a strong buy on these. I think we both agree with that.
That's a good one.
We both agree with marry the house, date the rate. As although I don't think either one of us like the slogan, but it's part of it. So for today, I mean, that's about all I got.
Yeah, that's it. Give us a call. Like I said, drop a comment, give us a like. Let us know any questions, guys.
Yeah, reach out anytime. We're both available. I know my phone doesn't shut off until about 10, 11 o'clock at night.
Yeah, mine doesn't shut off at all.
Oh,
so
yeah. Well, mine does. But all right. Until next time, guys, we will be posting weekly with these videos. So stay tuned for the next episode. I know the next one is going to be a very interesting subject. Let's just say it has to do with a NAR settlement and how that impacts you and us and him.
Yep.
But we'll talk about that next week.
Don't be afraid. There's good stuff on the horizon with that.
But until next week, Jason Kaufman with Kaufman Home Group at Heron Real Estate.
Adam Pearsall, Premier Home and Finance.
Have a great day. We'll talk to you soon.
See you, everybody.